please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they open up a tad bit on the back foot.
The risk reward was clearly in shorting yesterday. For today, it may or may not work out. If you have to short, you have to look for intermediate rallies.
I think the markets really had a great move after this quarter.
A little bit of weakness in the rupee, not a whole lot. Let's look at the way the markets have opened. That's a nice shade of green.
There is no other option but to bring down the current account deficit by the old-fashioned method, which is by reducing growth.
FY19 current account deficit, will be very close to the peak that we had in FY13-14.
The market is weak. We're down about 34 points on the Nifty, about 60-odd points on the Sensex.
The market, it looks like we're pretty much near the lows again.
Okay, if you thought yesterday was bad, I can tell you, trust me, today is worse if you are a bull. And that's because yesterday we had a trending day. Today you had a rally, and that's been sold into and how. This is Closing Bell. I'm Anuj. With me is Rupee. Hi, Rupee. Good afternoon.
Good afternoon, Anuj. 11,500 under threat as we start the show. There's a Nifty issue. We're seeing a lot of selling in consumer stocks and banks, etc. But I'll start off with asking about midcaps actually first today. The manner in which we're seeing suddenly, there's this level of pain. I don't want to be a sort of a party pooper, but it reminds you about 2-3 months ago, the way the midcap market was just collapsing. Yeah, I think that that point is well made, Surabhi, and I think Nifty Junior is the best indicator of where the sentiment is. Not even the mid-cap index. Mid-cap index, small-cap index have a lot of stocks where, you have, perhaps some shady stocks, if you want to call them that. But just pull out the intraday chart of the Nifty Junior. That's down about 1,000 points. So, 1,000 points on an index, and that's a big index that we're talking about. It's the largest stocks outside the Nifty. Nifty Junior is essentially that. It's not mid-cap stocks, it's not small-cap stocks. It's the largest stocks right after the Nifty 50 stocks. That index is down 3.5%. Make no mistake, today we are seeing panic selling. Today, the market is seeing a bit of a panic. Yesterday, was a bit of a one-off. Today, of course, there's a bit of a panic happening on the street. Now, let's see for how long it can continue because, from the highs, we've fallen quite a bit. The point we've been making for last many days now, the bank Nifty is decisively weak. It made a double top at 28,400. It effortlessly sliced through its 20-day moving average. It's making a move towards 50-day moving average. And the way dollar rupees intraday chart has played out today, it's an indicator that interventions are not going to help, are not working. And the crude at 79 and dollar rupee at 71. I know last week when we were talking about it, we was subject matter of a bit of a ridicule as well, that we're talking about only crude and rupee, but the fact is that combination of Brent at 79 and rupee at 71.5 is not what was baked in the price. And as someone very nicely said, that don't even try saying this time it's different. In stock market, historical lessons are always there, and trying to say that this time it's different, I think is inviting trouble. I totally take your point, Anuj. By the way, just to keep the context in mind, look at the way that graph is tumbling. We'll come back to the Nifty in a moment. The dollar is strong internationally today. There's no denying that. In fact, it's up as much as 0.5% to almost 1% against many of the other emerging market currencies. So given that, this is not too bad a picture. The yuan, for instance, the Mexican peso, all these currencies are sliding, the Turkish lira. But the other aspect, obviously, is the money market action, and the bond yield, the benchmark yield, has been consistently above 8% today, 8.04 now as we see it. That's a big move on the yield as well. And then just the profile of the kind of stocks that are falling. Huge names you've got, whether it's NCC, Sun TV, Balkrishna Industries, Havells. We'll go on, talking about this on the show. But Anuj, on the large caps as well, what do you think might have triggered such huge amount of unwinding in mid caps, and a word on the large caps as well?
When we presented the morning setup as well, this is the point that we had made yesterday. Surabhi, you had big stocks like Lever. Now it's tough to see Lever falling 8% in 2 days. It's not as if some traders unwinding positions. Lever doesn't fall 8% in 2 days because of that. Bajaj Finance doesn't fall 10% in 3 days because of that. Reliance doesn't fall the way it's fallen from its highs like that. Kotak doesn't fall like that. So obviously there's been some large scale selling at higher level. Genesis of this fall is
in the rally that we have had just before that. You know, the July and August month, we had massive rallies, especially in the broader market. I think it's just taking a step back. Whether we have margin calls or not, I think it's too early to take that call. But, you know, from extreme greed, it's very soon you turn to panic. And
so it's a fierce swing.
Fierce swing. Not absolute panic, I would say still.
Yeah.
But, you know, we are swinging there. And at some point, of course, the market will bottom out. But, you know, because the rally was so huge, perhaps the digestion is taking some time.
Okay, 11,500 is under threat, and the market's darlings haven't been spared today either. Stocks like HUL, Jubilant Foods, Dabur, Britannia. Consumer is something we'll focus on. Let's get started. Here's what's lined up on closing bell today. Consumer and banking stocks are taking it on the chin. Midcaps have also been wilting all through the day. We get in Mr. SP Tulsian of sptulsian.com, Sanjeev Bhasin of IIFL, and Sudeep Bandyopadhyay of IndiTrade Capital to weigh in on the market slide. It's obviously those macro cues that have tripped the bulls party. The market is at the day's low. Is there a bigger correction lurking ahead on the Indian street? We asked two big FII voices, Jonathan Shizzle of Ashburton, as well as Venkatesh Sanjeevi of Pictet Asset Management. And of course, we have our technical experts joining in to get you through what promises to be a roller coaster critical last hour of trade. Ashwini Gujral and Mitesh Thakkar joining in.
Okay, Ashwini Gujral and Mitesh Thakkar with us, in fact, to take us through the last hour. Good afternoon. Ashwini, been a brutal day today. The midcap index is down 550 and junior, of course, as we were pointing out in midcap radar, down 1,000 points. So in some senses, portfolios today would have hurt much more than yesterday. What's the call for last hour on a day like today?
Well, if you saw the worst yesterday, worst till now, I think the worst is yet to happen in this hour, because crude is almost 79, rupee is 71.37. I wouldn't be surprised if you fall 150 points on Bank Nifty from here, because now 11,500 is going and you will reach 11,450 in no time. So if you are still long, still not short, this is the time to get short. The macros are poor, and in this sort of macro situation, you can fall another 200 points on the Nifty, you know, without blinking a whole lot. So forget about individual stocks and IT and this and that. Right now, it's a market crisis, and the markets will go lower no matter what. So people should be clear what they are dealing with. So my sense is still good time to get short, carry shorts, because earlier what happened was 5 sectors went up, 5 went down. The corrections were, you know, consolidation type of corrections. This one is, you know, a knife, hot knife cutting through butter, and it can make deep cuts within an hour. If you see, crude was, I think, 78, 2 hours back. Now it is 79 plus. So, you know, rupee from morning 71.10 is now 71.40 almost. So the trends are much stronger out there, and that is going to have an impact here. And make no mistake, 1,000-point Nifty Junior means there is going to be follow through. Portfolios will hurt, and I would think that if it plays out and if macros get worse, you should be in for 11,250, 300 minimum, and then we'll take it from there. But the way large stocks are falling, that means some big guns are taking the view that they need an exit, because HUL is not impacted by inflation. So you have to look at it that way. When large stocks start to fall, there is a message out there. Having said that, Orient Bank is a sell with a stop of 83, target of 76. Union Bank is a sell with a stop of 89, target of 82. And Infosys is a buy with a stop of 734, target of 760.
Okay, that's a sell on, of course, 2 PSU banks and a buy on Infosys. Ashwini, this PSU Bank trade, though, you know, of course, you've been recommending it since morning, but at some point, you reckon it could get overcrowded? You know, we've seen quite a bit of damage, for example, in a lot of stocks already.
If the market's going to go down, Bank Nifty is going to go down, crude is going to go up, nothing can save PSU banks. And they can easily lose, 50% of what they've gained. The whole issue is that this market is way over leveraged. Even now, the premiums have not come down. They will come down once, the market starts to give you bigger falls. But my sense is that even PSU banks could have more downside. And the way it's looking, for a while, IT and pharma could be clear outperformers and money could come out of these domestic stocks and get into IT pharma.
Okay, those are some calls that Ashwini is taking. It's just astounding, the manner in which 3%, by the way, down on the mid-cap index. We're nearing a 600-point fall on that index. Junior Nifty, we've already spoken of. Ambuja, Havells, United Breweries, Edelweiss. I'm reading out some of the stocks that have been doing so well, and that's the kind of nature of today's trading action. Anyway, let's bring in Mitesh as well. Mitesh, your view on the day's fall. A thought on the consumer stocks, because the thing is, a lot of people, I mean, even on a trading basis, would still be long on consumer stocks. And this 8% sort of decline on a stock like Lever, where does it leave these trading positions? I'm not even talking about portfolio. And of course, the last 1 hour calls.
Yeah. Hi, Surbhi. So I think one on the markets, today morning I was talking about possibly a test of 11,500 and 27,400 on the Bank Nifty, and both the targets have been. I thought it will come in about 2-3 days, given the fact that the morning was looking slightly subdued. But I don't think we are seeing a sign of bounce back as yet, though we have taken some positions on the short side. So we have taken profit on some of the short positions, but I don't know whether I should attempt a long here. So I'll just wait. In case the Nifty continues to fall and dips below 11,480, good chance that another 80 to 100 points will happen, and 11,393, 395 is the next support area, which could be visited. Having said that, I think, consumer stocks are looking weak. We had a sell on Lever in the morning before the market opened. I think the next one which is cracked badly is Britannia. Is that, if the stock starts or continues to remain below levels of 6,300 and it's only about 30 points away from that, I think then the stock could possibly head towards 5,900, 5,850 zones. So I think there is some more pressure still left. Coming to my trading calls right now, I have 2 sell calls, but in the last 30 minutes since I mailed them, I think the stocks have come down a bit. So try to sell CG Power around 56.5 with a stop at 58.2. Look for targets of around 52. And Karnataka Bank, try to sell it around 117.5. Keep a stop at 119.5 and look for targets of 112.
Okay, fair point. It's not looking good, but sometimes for portfolio investors, perhaps you look at these moments to buy. But let's see if today is that kind of a day. SP Tulsian of sptulsian.com and Sanjeev Bhasin of IIFL now join us. Good afternoon. Mr. Tulsian, this fall in mid-cap basket today is unnerving, right? I mean, as we speak, the Nifty Junior is now down 1,100 points, 3% more than that. The mid-cap index down 550 points. Your thoughts on the broader market action today?
See, Anuj, in fact, I will say that the effect is seen more in the so-called expensive stocks. In fact, maybe you can't call HUL, Britannia, Marico, Dabur, Jubilant Food as the mid-cap stocks. So what happens when we see the losses, incurred by the traders in the long positions, which I've said of all these so-called consumer stocks, if you really see, people were just chasing these stocks only, that they are the safest, most defensive, or you can include Bajaj Finance. So what happens to finance the trading losses? The mid-cap stocks also get sold, and I think that this time the culprit has been these all expensive stocks, whether you can include the financials, private sector banks, and the consumption stock. Consumption stocks I have already named, and people were so overconfident that the things will keep moving up like this. Whether you talk of the Dabur, in fact, this I've cautioned in about a couple of weeks back, that the valuations are looking quite stretched. Whenever we have discussed Dabur or maybe Bajaj Finance. So I think the excesses always gets corrected, and it is very much essential that you need to take a valuation call. I'm not saying that the HUL, Dabur, Marico, and Bajaj Finance will get knocked down by the investors from their portfolio, but it's just a matter of valuation, which matters. Maybe a correction of about maybe 4, 5, 6, 7% from here. We'll again see the huge buying coming in them, because the trading positions by then will get cut by incurring the huge losses. So I think this is the excesses which are getting corrected, and this time the trigger has been more in case of the expensive consumer-oriented stocks rather than any other this one, where the shift is now seen happening in case of IT stocks like TCS, Infosys, where the re-rating is seen happening either because of the currency weakness, rupee weakness, or maybe because of growth seen in the US and other markets.
Okay. Well, there's some buying that's also coming back. By the way, let's pull up the intradays on Bajaj Finance and Lever. Since we're discussing these stocks, there's some recovery from the lows that they are managing to witness. There we go. That's just a spike that's come through right now on Bajaj Finance, and you'll see the same on HUL as well. Let's pull up Hindustan Unilever if we can. Sanjeev Bhasin also with us on the show. Sanjeev, your thoughts, and let's start actually with these consumer stocks, because it's not just limited to HUL, Jubilant, Dabur, Britannia. A lot of these names have been pummeled in the last 2 days. Is this just very natural human risk aversion, so take some profit off, or is there more to it?
Yeah, so, actually the fall is coming more in these stocks. I have not seen lever correct 7-8% in 3 days in a long time. And it's telling you that the smarter money is getting out of these, outperforming stocks which were very expensive, and it wants to buy the broader market. I am extremely bullish on the broader market, and I think in the next, by the next 3 days, by this weekend, you'll have settled down, the dust will have settled down. Now, this will be the opportunity you've been waiting for. So leave aside the Nifty, because there will be too many heavyweights there, whether that's a lever or it's, like you said, the Daburs of the world. But we still think in this FMCG basket, if you want to be in that, then ITC, Nestle, Dabur, and maybe a Page Industries. These 4 or 5 stocks you will have to include, because there is exceptional growth and these have been outperformers. We like ITC, we've been very bullish from ITC at 265. We will use any correction to buy, and we think that that would be the best name going forward. On the broader market, like we said, that is where the real opportunity lies. So whether it's insurance, whether it's pharma, whether it's power, these are the 3 sectors which we are very bullish, and we think that another 100 points on the Nifty, 10,400, will take out a lot of steam which is there and over leverage. But the broader market is where you should be looking at, and that we'll get to by the end of this week.
Okay, just look at intraday chart on a PVR now, for example, and this is what we're talking about now. The kind of stocks that are moving. PVR is now down 4.5%. Pull out intraday chart on an MRF. That's also become a bit weak of late. Stock making a move. The one that's really impacting the bank Nifty today, and especially in last hour, is HDFC Bank. The biggest of them all. Pull out the intraday chart on HDFC Bank, and after a long time, Surabhi, you've seen a serious correction in HDFC Bank. It's, its high was what, 2200 something, I think, if my memory serves me right. Perhaps higher than that. Kotak's high was somewhere around 1420, I think. And I think these are the 2 stocks where you have these 2 stocks account for more than 51% of the Nifty Bank. By the way, I think there's soon going to be a rule where you're going to monitor. Perhaps the margin requirement would be need slightly higher for indices where 3 stocks are accounting for more than 50%. That's only Bank Nifty. That's only Bank Nifty, obviously. So that is also been there. So a lot of stocks are falling right now. But from the low point, absolute low point, there's a bit of a recovery as well on the Nifty. So still trying to defend 11,500. 11,520 is, of course, the 20-day moving average. Just look at that. Just trying to defend that. How successful is that? We'll find out. We'll take a break. Up next, we'll get chatting with a big FII voice. We've got 2 today. First one, Jonathan Schiesel of Ashburton on the other side.
On the mid side of the market as well, I mean, there are some stocks that are trying to fight back. How successful is that attempt? That's another question altogether. Mindtree, for instance, would be that one green speck in the ocean today. Again, 2% rise. Management sounded pretty confident in their commentary. Again, some attempt to recover from the lows on stocks like Dabur, Exide, LIC Housing Finance. But then, these are just small interventions here and there. The mid-cap market still has a bigger problem. Let's get more trading ideas in. Sandeep Wagle is with us now. Sandeep, what are you doing? Selling today, or are you being a brave heart and buying? Sandeep? Okay, I don't think we have that audio through. Let me quickly run through his calls. He has sent us his calls. So, as the graphic was just telling you, there's Interglobe, and that's a sell. Stop loss is 921, target 873, and there's a sell on Syndicate Bank as well. So, both are sell calls from Sandeep. On Syndicate Bank, the stop loss is 40, target is 34. So, some more trading ideas on the sell side as far as Sandeep goes.
Yeah, I think today is that kind of a day. Mr. Sen, I wanted your thoughts on a couple of stocks which have been very volatile of late. Today, for example, Balkrishna Industries, it was down 8% yesterday and now down 7% today. The market's worried about the capex plans. You reckon it's presenting a buying opportunity, or again, would you classify this among expensive stocks?
See, Anuj, if a company will not go for capex, if they have the huge demand, they are setting up a plant in America and they are setting up a plant here in India, in the state of Gujarat, how they will grow, because those things have been the trigger. But if the market wants some trigger for the share price to get corrected, now again, if you just take a call, the weak rupee, probably Balakrishna Industries is seeing the largest beneficiary, because 90% of their turnover, they are making OTR tires, and in fact 90% of their turnover is coming from exports. They are seen to be the biggest beneficiary. Again, the capex of about 800-900 crore is going to be partly from the debt, not much of the debt. So I don't think in that both the reasons are seen to be negative. But stock having moved to a level of about 1400 plus, I don't think that these kind of valuations were just sustaining, because what has been happening, that excesses, which I have said, we have seen that happening in the month of May and June in case of the mid and small cap. And now we are seeing that happening in case of the large caps, because in this last couple of months, all these stocks were seen going one way, in spite of they were not being the what you call consumer play and all that. So this is just a profit booking. And since you have said that whether this is giving a buying opportunity, I would say that yes, they are giving a buying opportunity, maybe at the current level or maybe 5% down. But I don't see more than 5% fall in all these stocks, which you have discussed, whether you talk of Balakrishna Industries, Dabur, Marico, Hindustan Unilever, ITC, Jubilant Food, Page Industries. So yes, these things are just the excesses are getting now corrected, and as a tactical move to trap the long positions which have been held by the people by the weak hands in these stocks. Once they exit again, they will start moving up.
Let me just add two more stocks then, Mr. Tulsian, to that list and see if you have the same view there. We got some negative commentary on LED pricing. Apparently, there have been some price cuts in the market. So there's pressure on Crompton Consumer. Havells is down about some 5% as we speak. 6.5% actually, Havells. So is this a passing phase or a specific view on these two stocks, Crompton Consumer and Havells?
See, Surabhi, again, you take the case of Havells. What is the revenue mix of the LED? Not more than 20%. Take the case of Crompton Reeves Consumer Electrical. They have the 27 or maybe 50% of the turnover coming in from the fan and the consumer durable. So I'm unable to understand again the same reason. Havells, again, there was no reason. In fact, if you rewind the tapes, I've said that we have been giving the positive call on 550, but have started giving the profit booking call from 680 to 700. So again, the victim of the too much pull up, seen in the share price of both Havells and Crompton Reeves. And I don't subscribe to this view that the LED prices, because both the component of the LED business in both the companies are seen to be quite minimal, and I don't think that is seen to be the reason for this kind of correction.
Okay, Mr. Tulsian, thanks a lot for joining us today. We'll have, of course, fresh discussion with you tomorrow. Sanjeev, your thoughts on IT now, because is it now getting overcrowded? Infosys, TCS, HCL Tech, and these are large stocks now making massive moves. TCS is now perhaps up 45-46% for the year, and after a good second half last year as well. Same as the case with Infosys.
Correct. I couldn't agree more with you. Actually, we've used all these rallies and we are getting light on IT. For us, it's pharma which we want to play on the weak rupee. And we are extremely overweight on pharma. Pharma would be our top pick for 2019 and now. And we think that would be the best play. Like you said, IT, I think actually if you have some investors who are watching, they should actually buy some puts on Infosys and TCS, because I think best of results is priced in any slight bit of weakness or underestimation can see these stocks correct. Now they automatically become a very good proxy play to the weak rupee, but even a child would tell you that. So I think pharma would be the way to play that. IT is looking extremely overstretched, and fundamentally there is no change in the guidance or the margins increasing in any form. That would be played on pharma. So we are very, very overweight on large cap pharma, and that's where you should be putting your money.
Okay, one space obviously where nobody wants to go right now is construction, and related would be cement because of this Supreme Court order. Lots of selling on some of the EPC players like NCC 8% down on that stock, and equally big selling on something like India Cements or even Ambuja, ACC, most of the cement players, or even a Grasim for that matter. Sanjeev, just a quick word here. Would you buy anything in this dip? Right now there's mayhem all around, or would you just steer clear? Construction and cement.
Yeah, so Surbhi, for us, we've been very, very overweight on cement all the way from 36.50 on Ultratech and 200 on Ambuja when nobody was touching. I think the results were way ahead of street expectation, and we would see the same rebound once the monsoon ends. We've had a brilliant monsoon, by the way, in the north now in the last leg, and I think that will anyway be a very, very big positive. However, like you said, we have to wait more on the Supreme Court order, which has sent a lot of uncertainty, but I don't think it will have that much of a major effect. It's related to two areas, so we'll have to see the ways and cons on that. But for us, if you are looking to play India for the next year and beyond, you have to buy Ultratech and the Ambuja ACC combined. So wait for weakness, but make it a sip and you'll be better off, because we think this uncertainty from this construction side should end faster than we imagine.
Okay, Sanjeev, do you have thoughts on Sun TV? That's a stock which has been continuously falling after reporting excellent set of numbers.
Correct, Anuj, it's slightly baffling. Both Z and Sun are now falling prey to what are the new things Jio is going to launch. And I think it's the advent of Jio, 1,000 cities, optic fiber. It's now telling you that it's not only the pinch on the telecom, it's even media and TV related where you're going to see a lot of pressure. So as a contrarian play, I think there is a lot of value both in Sun and Z. But like you said, at 11,500, these are underperforming sectors. So for us, we would rather play Reliance through this window, and any decline in Reliance should be an added opportunity.
Okay, Sanjeev. All right. Thank you for joining in. Good talking to you. Let's see where this stabilizes, what happens. It's Sanjeev Bhasin there, views from IIFL. Well, actually, speaking of IIFL, let's actually head to their Invest India conference. We now have with us Jonathan Chisel of Ashburton. They have almost $100 million invested in the Indian market. So good to get a sense on India from Jonathan. Good afternoon, Jonathan. Thanks for joining in. Now, off late, last 1 week or 2 weeks, macro issues have once again reared their head here in India. That's the talking point. Crude is at 78, Rupee is at 71. Your thoughts?
Clearly, I guess at the margin, we have seen a deterioration in the macro from very good macro to some stress certainly cropping up, as you rightly say, in a few select areas. The reality, though, is from a market perspective, India really since March has dramatically outperformed, and I think one of the main reasons for that outperformance is actually the macro stability. When you compare India's macro to other emerging markets, it does stand out as a very stable economy. It does have its issues, but overall it's actually much more stable than plenty of other emerging markets.
Jonathan, hi, good afternoon. Tactically you are positioned in currency beneficiaries like IT and pharma. In fact, you have been very bullish on both these sectors. Do you think the tailwind will continue to benefit these sectors?
Yeah, so if I'm honest, I think the positioning, the herding that we've seen certainly into IT, when I was talking about IT, I guess about a year ago when it was looking unloved, extremely good value, we were quite interested in, we were topping up our IT positions then. I think if you fast forward a year later and you look at some of these TCS charts or emphases charts, even some of the mid-cap charts, they've clearly run incredibly hard. So now I think the value play isn't quite what it was. However, I think obviously in a phase of a weak rupee, which seems to be going on for a little bit longer perhaps, then probably investors will stay herded into some of those areas. I think pharmaceuticals is an interesting space that's been more recent. Obviously it's taken some time before that space seems to be now picking up, and that seems to actually be replicated globally as well, with healthcare across the globe seeming to finally start to outperform.
So you seem to like pharma more than you like IT, given the valuations, and I get that I get where that comes from. So relatively, does that mean you'll add more to your pharma weights than IT in your portfolio?
Unlikely we'll be adding. We've already got actually full positions, certainly in IT. We did add to some of our pharma positions about 3 or 4 months ago, which has worked quite well. Potentially we could, we have been looking at some various other pharma stocks away from the mainline names. But at the moment we're quite focused on one stock, which is Sun Pharma, which has done very well more recently. But we have been looking for another name to add, but we haven't done anything just yet.
Okay, that's of course on pharma, but you own a few consumption names, of course, in India. We've been talking about them because for last 2-3 days, quite a bit of decline. Today, 8% fall, or today and yesterday included about 7-8% fall in lever. Are valuations still quite okay for you?
I think when you look at particularly the consumer staples names, you couldn't argue anyway to say that the valuations are attractive. I think valuations in some of the staples names are quite frankly stratospheric. The Hindustan Unilevers and names of similar sort of categories or similar names as that, they're trading at almost unheard of valuations. Away from some of the staples names which people are again herding into in this time of uncertainty, there are pockets of value to be had. But I think you have to really focus on the bottom up side here, because as a whole, consumption is an expensive area to be in at the moment.
Okay, so we've spoken about consumer, IT, pharma. A view on midcaps as well, Jonathan, because that's become again a problem area in this market in just the last 2 days. I mean, look at the kind of selling that we're seeing today in midcaps and small caps. Are you looking for opportunities here after the sell-off, this continuing sell-off, or would you rather be with larger names in India?
Yeah, so I think whereas perhaps mainline industries, the what you might call the narrow indices like the Sensex or the Nifty, are trading at pretty much record valuations. The mid-caps and the small caps have gone from record valuations at the beginning of the year, and they've now, in certain instances, derated quite substantially. So we think, yes, they're still perhaps above historical valuation levels, but they've come down a fair way. And actually, when you look at individual counters, we do see value emerging in some of that in that space.
Okay, within autos, of course, you have been bullish on Eicher Motors, been in your portfolio for a long time. But now the street is worried about competition, capacity. Is that a near-term concern, or are you tempted to take some money home here?
I think the issue has been, this has been a stock we've always had a lot of comfort from a very long waiting list, and the waiting list is finally pretty much gone. I think when you look at the valuations, we have seen quite a substantial derating in the name. For us, we still think there's a massive opportunity both within India and the export side. And obviously they're just about to roll out new higher cylinder motorbikes for the export market as well as domestically, and some other variants to try and reinvigorate what some have argued is a bit of a stale model lineup. So for us, the valuations have come back down to more interesting levels. It's still a very well-run company, brilliant corporate governance, so we're still very comfortable to hold on to it. And obviously the great thing is that valuations now are much more palatable.
Okay, now just a separate category, since you are talking about finding value, looking for value in mid-caps, any view on tire stocks here?
It's an area obviously which will have some pressure from rising raw material and crude costs. Yes, there will be an underlying structural growth story within the names. Traditionally there has been periods of overvaluation, and then sometimes they've become cheaper. It's not a sector we've focused on too much at the moment, but and there is an export side as well to that story. But it's an area where we're not particularly focusing on at the moment.
Okay, we've discussed a lot of sectors and your stocks, Jonathan. Since the market's down quite a bit today, I just wanted your thoughts on this. What are the key risks for Indian equities in the near term?
So the risk clearly is, there's two risks, domestically and globally. So the domestically, obviously, it's a busy political calendar coming up, so that will always be a noise in the background. Clearly, we're still coming to the end of the monsoon season, so we need to keep an eye on that. So domestically, there are those issues there, obviously with rising crude prices, with rising inflation. I think what you're going to see is, if you look, for example, at diesel's now trading at all-time record highs in India. So perhaps some of that consumption story might be, the gloss might be taken off it if people are having to dig a bit deeper into their pockets to pay for rising input prices. So that's certainly a risk domestically, but obviously globally, we continue to face risks from the whole issue around trade, but also the reality is the global economy is slowing down. Perhaps not as precipitously as some would suggest, but we're moving into a sort of a desynchronized phase of global growth, and we are seeing pockets of stress beginning to emerge. So there are risks, but obviously for us net, what we are also seeing is India, clearly with the GDP figures that came out a couple of days ago, there is a domestic growth story still very much intact.
Okay, pockets of stress emerging internationally. That's something to keep in mind then. So in that case, let's talk about what you would avoid in India, Jonathan, areas where you simply will not venture.
At the moment, we're still out of the telecom sector, haven't been there for a very long time. We are somewhat cautious about some of the commodity linked sectors because of the slowdown in China, although to a degree that's been priced in already. And then some of the energy sectors as well. We have no weighting to the energy space as well.
Okay, and finally, can you give us your views on corporate banks like ICICI, Axis and SBI?
Yeah, it's extraordinary. We were doing some work on that last week. When you look at the long period of underperformance vis-a-vis the private sector banks, the corporate banks have suffered vis-a-vis the private sector banks. Over the last 3 or 4 months, there's been a massive catch-up trade of corporate banks versus the private banks. I still think potentially, when you look at ownership levels, that could potentially have further to go. However, I think when you look at the franchises of the private sector banks, you look at the capital adequacy ratios, and you look at the positioning of them, I think potentially some of these private sector banks are looking quite interesting again after coming off.
Jonathan, always good talking to you. Thanks a lot for your time today. So that's the word coming in from Jonathan Schiesel of Ashburton. Of course, he's got in the past some real big money spinners, multi-baggers actually, like Eicher Motors and of course even some of the IT names. Just want to point out a stock where you're seeing quite a bit of volatility and a lot of move intraday, and that chart would come up for you. It's Adani Enterprises. And the reason I want to point that out is because, while you're seeing this this rally now play out on Adani Enterprises just right now, two things. A, it will perhaps get into ban today because, market-wide positions would cross its limit. And B, the all existing contracts will expire tomorrow and fresh contracts will be issued a day after that. So, tomorrow you could expect a lot of unwinding pressure on this stock. So just thought, would point this out.
Okay, that's Adani Enterprises on our radar for the market. The good news for the bulls is that this has halted. The slide has stabilized and we are down 56 points. So for what it's worth, 11,500 right now, it's holding. You can see the way that's bounced. Let's see if we can kind of continue on this track. Even the midcap index, which was down almost 3%, is now down 2.5%. So there's some pause that's kind of taken place in the last couple of minutes. Quick break. We will come back and get you trades for the last half an hour with our technical experts.